All right. Hello, everyone. Hello and good evening. So, everybody here in Zoom, good evening, everybody. Everyone in Facebook and YouTube, Instagram, and Vimeo, good evening. And welcome to our event tonight, Your Path to Home Ownership and Down Payment Assistance. So, as for our Zoom rules, kindly please mute yourselves as you enter our Zoom. And please do your best to be on camera so that we can see your beautiful and handsome faces. All right, so you will be given the opportunity to speak to our participants or our speakers tonight via here in Zoom. And if you're watching us live, please go ahead and register yourselves at pkrbuyersnetwork.com so that you will be here in Zoom and you will be given the bonus time to ask your questions to our speakers. Okay, so yeah. Once again, this is Kay, and I am the broker's assistant here at Platinum Key Realty. And let's welcome here as well. We have our property management expert. Her name is Zyrene. Hello, Zyrene.
Hi, everyone. Hi, welcome.
Yes, thank you. Good evening. And we also have here our marketing department, Peter. Hello, Peter. Good evening.
Hi, everyone. Good evening.
Yes, hello there. And we also have our sales team. I have here Bliss and yours truly. Hello, Bliss.
Hi,
You
and good
there?
evening, everyone. Yeah, I'm here. Hello, everyone. Good
Awesome.
evening.
Good evening. All right. So yes, finally we have here our wonderful, gorgeous, awesome, exemptional, the managing broker of Platinum Key Realty, Nikki Sanji.
Yay!
Yay!
Everybody, I want to welcome you and thank you for taking the time to learn, to grow. You know, I posted on my Facebook page a few minutes ago, just letting people know what we're doing, and we are going to be going live because I believe money is available for us to do great things. And as people of prayer, I am a person of prayer. I call money in from everywhere. And I believe tonight we are going to learn how to locate money, how to find money, to buy homes and do things that we are believing, that we're praying, that we're hoping to get accomplished in 2023. So as Kay said, I'm the managing broker here. My name is Nikki Sanji. I have been in real estate for over 20 years, having an office in Central Florida and one in the Atlanta, Georgia area. I love to share knowledge. I love to show people how to get it done. And so in these series of Zooms and lives that we're doing one every month. We're teaching and we are adding value to your lives and everyone out there that's watching us as how you can get different things done. So this month's theme is down payment assistance and home ownership. And ladies and gentlemen, I want you to know we have quite an expert in our midst today. Quite an expert. We have Miss Debbie Frazier from Coast to Coast Mortgage. Now, Debbie has been licensed since 1982. So do you believe that Debbie has something to tell us today? Oh my gosh, she has been licensed since 1982 and she has worked as a loan originator. She has worked as a loan officer, as a closer, as an underwriter, and she has even owned her own mortgage company. So without further ado, I'm going to get right into it today. And I'm going to turn things over to Miss Debbie Frazier, who is going to kick off and share some nuggets with us. Over to you, Debbie.
Thank you very much for that wonderful welcome. I'm going to share my screen now, if you'll let me, and I'm going to bring up some slides that we're going to cover. Okay, here we go. All right, can everybody see that?
Yes, we do.
Okay, excellent. I'm kind of new to the Zoom thing, so I'm just still making sure that I can get everything to work properly. Thank you again, everybody, for having me. I appreciate you taking a few moments out of your busy holiday weekend to go ahead and learn a little bit about homeownership and down payment assistance programs. I'll just be spending a few minutes talking about a couple of the top programs that I use to close and help people get into homes. So we're going to jump right in. Down payment assistance programs, also known as DPA, are designed to increase homeownership opportunities for low to moderate income individuals and families that are purchasing primary residences. Coast to Coast Mortgage is proud to offer multiple down payment assistance programs to give homeowners several options to pick from, depending on your financial and property repair needs. All programs have slightly different guidelines and restrictions, and I've been helping purchasers navigate through all the red tape of all the pages and pages of requirements since 1982 to make your homeownership journey a happy and pleasant experience for you and your family. The number one program I would like to talk about out there is the Hometown Heroes program. It's one of the best programs that we use because it will give you a full 5% of the loan amount, which they do unfortunately cap at $25,000, to be used for your down payment and your closing cost assistance. So most of the buyers on this program get in with just their vendor service money. And great news, starting July 1st, the occupation restrictions go away. That's a very, very big thing for this industry. Right now, an applicant must be full-time employed as either a first responder, be on active duty, be in the medical profession, be a teacher or a civil servant to be able to qualify for this program. And July 1st, the occupational restrictions go away and it opens up to everybody to be able to use this program. They do have a minimum credit score of 640 for each of the applicants. They also have income and loan amounts per the county that you're going to live in. For Orange County, you have a maximum cap of $124,350 for your income, and the loan limit is $472,030. Basically the same for most of the counties surrounding Orlando. Applicants have to be a first-time home buyer, and they must occupy the home. There is no second mortgage requirement on this program. Excuse me, no second mortgage monthly repayment. The program itself is a second mortgage for that 5% that they're giving you, but there's no monthly repayment while you're living there. But if you move out, you do have to go ahead and pay off the loan and pay off the second mortgage for the Hometown Heroes. Online homebuyer education courses will be required by at least one of the applicants. It's a quick little, 30 to 45-minute class. It's online, no big deal. It just kind of teaches you everything that you need to know about becoming a home buyer and some of the hurdles that you're going to overcome and get into as you're being a home buyer. And on this program, no renovations or escrow holdbacks are allowed. So if it needs a new roof or a new air conditioner, this program will not work for you, but I do have another program that we'll talk about here in just a second that will. Acceptable properties on this program are going to be single-family residences. We can do double wide or larger manufactured homes or homes that are in a planned unit development. So this is a very, very good program. The next program out there does have the availability to be able to do the renovations. So under this program, they partner with FHA, and the down payment is going to be 3.5%. So you will receive 3.5% of the sales price to be applied for your down payment. So you do not have to come up with your down payment. Your down payment will be this program. The minimum credit scores on this program is 620. And to qualify, you have to be one of three items, either a first-time home buyer, which in their eyes means that you have not had any kind of a deed in your name in the last 3 years, or you can qualify by the income. The income must be equal to or less than 140% of the median household income for the limit. In your area, the 140% comes to $112,140 or for annual income. Or the third thing is you must be a full-time employee, either in the military, a first responder, in the education, the medical, or civil servant profession. So to qualify for this one, you just have to be one of those three items. This program does also require the online homebuyer education class. And this program, unlike the first one, does allow mom and dad to step up and be a non-owner occupied co-borrower for you. So sometimes, you may not be able to qualify for as large of a home on your own as you would like, and mom and dad can step in and be a co-signer for you. So this does allow that. Your down payment assistance can also be used with renovations or escrow holdbacks for this program. So on that home that needs a new roof or a new air conditioner system, this program does allow you to combine all of those things, and we can add into your loan amount your vendor that you want to use for your roof or your new air conditioner, or say that you want to repair the kitchen, you want new appliances. All of that is perfectly allowed with this program. The program does allow single-family residences, single-wide or larger manufactured homes, the planned unit developments, and it's good for townhomes, 1 and 2 unit dwellings. You can still get seller concessions up to 6% to help you with all of the closing costs. And there is no second mortgage payment on this loan. The loan is forgivable after 10 years of living there. So even though you're going to be there for 30 years, it's going to be forgiven after that 10-year period of time. So this too is a very good program for first-time home buyers that just haven't had a chance to save a whole bunch of money to get into a home. My next program is going to be one that does have a payment attached to it for the second mortgage. The reason we have all of these different programs is your credit scores vary, and you have the variances also with the renovations and the non-renovations. So this program, you still get the 3.5% for the down payment. They'll go all the way down to a 600 credit score. They do not have any first-time homebuyer requirements or occupational requirements or income restrictions. So that's another key reason that we use this program, is if you weren't able to qualify for any of the other ones, you can definitely fit in, because you don't have to be a first-time homebuyer. You can't own another home at this time. But say you just sold one and now you're getting into another one, this would be the program for you. Non-owner occupied co-borrowers are allowed. No renovations or escrow holdbacks on this one. And the acceptable properties are single family, double wide or larger manufactured homes, and the PUDs. This program does allow for seller credits up to the 6%. And this one does have a second mortgage payment, which is a 10-year amortization. The note rate is 2% above what your first mortgage rate is going to be. So that program also is a great program. The last program, that I wanted to talk about, these programs have been around for a very long time. It's the conventional Home Possible and Home Ready programs. They are good to help you get into a home because they've got reduced private mortgage insurance and reduced hits to the interest rates. So it helps you get in for 3% down. Your funds can still be gifted from a family member, or you can use your own funds. So unlike the other programs to where the lender is going to give you your down payment, on these programs, you have to come up with your own down payment. The minimum credit score is 640. You don't have any restrictions for being a first-time home buyer, occupational requirements, or any location requirements. Your income has to be at or below 80% of the median income limits. So that again is going to limit who can qualify for this program. You do have to have online homebuyer education for this one as well. No renovations or escrow holdbacks are allowed. Acceptable properties are the single families, the PUDs, the townhomes, and the manufactured homes. And the seller can kick in 3% to help you with your closing costs. Now, I have also prepared some worksheets that would kind of give you an example of what you would be looking at for monthly payments. So let me share that with you. So here would be our first one. This is our Hometown Hero program. So I took an estimate of $300,000 for a purchase price. And as you would see, these are your closing costs and your escrows and things of that nature. But what I want to direct your
Debbie?
attention to, yes.
Abby, we're not seeing the new slide. We're still seeing the PowerPoint.
Okay. I wonder why you can't
So-
see that.
Do stop
Okay.
share. Just do stop share and then reshare whatever you want us to see. There you go.
Okay.
Mhm.
All right. How about now? Can you see that now?
Hello.
Hi, everybody.
Hi.
Go ahead.
I can see the slide, but I can't see behind it. My name is Rashonda Butterfield. I'm able to log in.
Okay, Rashonda. She's coming up with the slides.
Okay, got it. Thank
How's
you.
All right.
that?
Can you see it now?
I can. Yes. Thank
Yes.
you.
Mhm.
Excellent. Sorry about that. Okay, so on this slide, this is going with that Hometown Hero program. And by the way, guys, if you'll email Miss Kay, I will be more than happy after the presentation is over to shoot you over an email of everything that you're looking at. It's a lot of information to absorb, so I planned on putting this presentation together in a format that I can email over to you so that you can digest it a little bit more slowly and at your own pace. And then my contact information is all over each of the pages, so definitely feel free to reach out to me and ask any questions that you may have. So the Hometown Hero fee worksheet, I want to direct your attention down here. After you got your principal and interest payment, your homeowner's insurance, your real estate taxes, and your mortgage insurance, your estimated payment would be approximately $2,320.68
Sorry, Debbie.
for $300,000 purchase.
Can
Yes,
you make it a little bigger?
Yeah.
We can see. Thank
you cannot see, okay? How's that?
Perfect.
Is that better for everybody?
Oh, yes.
Yes.
Okay, excellent. So down here is your monthly payment breakdown, principal and interest, homeowner's insurance, property taxes, and mortgage insurance. So on a $300,000 purchase, $300,000 purchase at a 6.25% interest rate for a 30-year fixed rate, you're looking at a total payment of approximately $2,320. Now, obviously, your homeowner's insurance and your real estate taxes are going to vary depending on what property you pick, because you get to pick your own insurance agent and your real estate taxes go along with whatever property you have. This particular program, the way I've worked up the Hometown Heroes, is you get that 5% credit. So you've got the credit from the lender for your down payment. Up here, you've got that $10,500 as your minimum down payment, but we're giving you all these credits down here of $14,475 for that Hometown Hero program. So you can also ask the seller to step up and cover the remainder of the closing costs. So in this particular case, I've given a $6,800 credit from the seller. So that reduces the buyer's out-of-pocket expenses to just $1,490. Basically, what that's covering is what we call your vendor services. Your vendor services are things like your credit report, your appraisal, and your survey. Those are items that you would have to pay at the time that you place those orders. So I've worked up the net sheet to where you can buy a $300,000 home for just $1,490. So that is the Hometown Hero program. The next program we talked about, and I'll go ahead and blow this one up, was the down payment assistance program at the 3.5% down that did allow for the renovations and the escrow holdbacks. So same scenario on this. I'm sorry?
What is
your question?
Yes. What is this one called again? I'm sorry. I'm just joining because I wasn't able to get in.
Oh, okay. Not a problem. This was the down payment assistance program number 2.
Thank you.
This, So this one is the one that is allowing the renovations. So each program is slightly different. You'll notice the interest rate on this one went to 7.75 as opposed to 6.25 on the other program. But it does allow you to do the same thing, to where you've got all of your credits from your seller, your credits from the lender giving you your down payment assistance, and your out-of-pocket expense is still only going to be $1,562 to basically cover your vendor services. Your payment on this one after insurance and taxes is going to be $2,617. So slight differences, but again, everybody doesn't fit into each program, and that's why we've got the different variances. And then the last net sheet I wanted to share with you today was on that third program. Okay, this one has the second mortgage payment in it. The interest rate is still 7.75 on the first mortgage, but that second mortgage payment had a 9.75 interest rate. So you'll see here, we've got $134.82 extra payment. That's for the second mortgage to cover that $10,500 down payment. So your total monthly payment on this program would be $2,752 for that $300,000 purchase. And your out-of-pocket expenses is going to run you $1,455 to cover your vendor services. So those are what we were looking at to give you a help breakdown on that. And let me get back into the share screen section again and go back to this last slide. Okay, so last slide is this, my contact information. The next step for you guys would be to call me with your 2-year employment history, your gross monthly income, a list of your monthly paid bills. We'll talk about your credit profiles. And with that information, I'll be able to determine which of these programs that we have talked about is best going to fit your needs. And there's all of my contact information. And that's all I've got for everybody today. Open the floor to any questions that anybody might have.
Okay, excellent. Thank you so much, Debbie. So before I start with the questions, you can just go ahead and stop sharing. I just wanted to highlight a few things that I heard, that I heard in your presentation. Okay, so let me see if I got it right. I'm not sure how many people are familiar with the Hometown Heroes program. But we know that program was set aside for people that were emergency responders, military, etc. But I'm so excited because Debbie said July 1st, they're going to open up that program for anybody who wants to take advantage of the Hometown Hero. They can.
That's a major thing.
Exactly. So that is exciting. So everybody wants to put a note for that. The Hometown Hero program is going to open up. So you want to tell your friends, tell your neighbors, tell somebody about it, because that's an awesome way for you to get some money. So at the beginning of this, I said, there's money available somewhere out there. And today we're going to locate that money. We're going to find that money so that we can become homeowners and we can make the next move. Now, the next thing that I heard, Debbie, so you broke down about 3 different mortgage programs, and you showed us how we can use down payment assistance. Go a little deeper. I didn't know that lenders provide down payment for borrowers. How is that possible?
Yes. They use, one of them actually goes through an Indian tribe called Rosebud. And this Indian tribe is the one that's actually granting that 3.5% money. The other program is truly a lender provided program. They own the sister company that is giving the money. So they are truly considered lender provided legal sources of down payments. And that's a great tool to have to be able to get into a home. These things weren't available 10 years ago. These things have only been on the market a few years. So it's a great way for home buyers that have been struggling to try to save all that money that's usually required to get into a home, to get into that home so much cheaper.
I got you. So now when you were showing the net sheets and you were showing like the monthly payment, I noticed the payments were in the 2000, 2006, 2007 range. Guys, I want you to know, if you're not going to pay the money up front, you're going to have to pay it somewhere, you know? So if you're not paying the money up front, you got to do it little by little in your payments. So if you see the payment, don't be scared, because it got to come somehow. If you don't have the money up front, and everyone, the systems, the programs are helping you to get the money up front, you still have to chip in it somewhere. And if you don't want to be in the 2000 ranges for payment, then what you can do is just find a lower priced option. That means you're going to have to make up your mind to be on the outskirts and different things. Now, Debbie, I noticed you didn't cover, they have some 100% programs like USDA and something and
Yes.
things like that. Can you share a little bit about those type of 100% financing?
Yes, would love to. We've got the USDA program. That is the reason I didn't share it is y'all are in the city. The USDA is a rural-based program. It's a population grid. It will only allow you to be in the rural areas. They will provide 100% financing. They allow the seller to contribute 6% of the closing costs. And you don't have any renovation money with that, but they do have escrow holdbacks with that. If say you've got a roof or something that needs to be fixed or an air conditioner because it didn't pass inspection, those escrow holdbacks are allowed under the USDA program. Now, the USDA program,
meeting seminar.
because it is a 100% program, it does have lower debt ratio qualifications. So you cannot be approved for as high of a loan amount with that program as you can some of the other ones, just because they're, it's a rural program, 100% financing. They're just a little bit more conservative on things. So they only go up to a 41% debt ratio. And that rural thing is, again, doesn't fit everybody's needs, because if you're in the city, that program's not going to work for you. But we also do have the VA program, which is 100% financing. So if you're a veteran or the widow of a veteran, you're eligible for 100% financing, with the seller covering all of your closing costs under that VA program as well.
Okay, excellent. So, okay, I know we have rural areas on the outskirts of Orlando that we do currently selling in a market that can qualify for USDA programs.
That's awesome. Those
Okay,
programs are
excellent.
great.
Excellent. So now we're kicking close to the 6:30 mark, and I'm going to do things a little differently on this Zoom because we have so many people and I know you're burning with questions. So I'm going to open up the floor. If you have a question for Debbie, if you have a question about the process, I'm here, Debbie's here. We're willing to answer your question for you. So anyone has a question about what you saw or something you want clarification on?
Hi, this is Maria. I do. Thank you so much, Debbie and Nikki and Kay and the rest of the gang for putting this on. It's so far very informative. And I truly believe in being an informed consumer. My question that I have is there a maximum or on if you use any of these programs of how much a home will cost? So is there a maximum saying that you can't buy if it's more than, whatever the maximum might be?
Well, it's going to be a loan amount restriction, like your Hometown Hero and your FHA programs. They have maximum loan amount restrictions, $472,000. So that's going to be your limits on those programs. Your USDA and your VA, they're just debt ratio related. So as long as you can qualify within the debt ratio, sky's the limit.
Okay, then. Thank you for that. That was my question. Thank you.
You're welcome, Maria. You're welcome. Anyone else have a question?
I think we do have from Sandra. Go ahead, Sandra.
An independent contractor, I'm seeing she's written in the chat box.
Okay.
Yes, an independent contractor is considered self-employed. Self-employed individuals have to be in that profession for 2 years, because we have to use income off tax returns that have been filed for the most recent 2 years. So we're going to add your net income and then anything that's reoccurring expenses, add the 2 years together, divide by 24, and that's how we're going to come up with your average monthly income, as opposed to somebody that's on salary or hourly. So yeah, 1099, self-employed, all of those are 100% acceptable.
Okay,
Great question.
Wonderful. Wonderful. Anyone else have any questions for us?
Hey, Debbie, this is Tanya. How are you today?
Hi, Tanya, how are you?
Doing good. I have a question on the hometown borrowers program. Now, for that particular program, I'm sorry, I missed the point where you stated for the payback. Is there a certain length of time that they have to remain in the home, or what's the criteria on it as far as?
Yes, the Hometown Hero is a full 30-year note. So they do require you to hang on to that loan for the full 30 years. Otherwise, it is repayable back to them at a, broke down amount depending on how many years you have been there. So it is not a forgivable item. That second mortgage is there for the life of the loan. So if you sell it in 5 years, when you're paying off your first mortgage, you've got to pay off your second mortgage.
Okay, great. And what about prepayment penalty?
No prepayment penalties on any of them.
Okay, wonderful. Thank you.
Good question.
My pleasure.
All right.
I see in the box where Sandra had a question, Kay.
I think we answered Sandra. Miss
She
Sandra,
said, will you run credit report?
okay.
Okay, I see a question from Shay. If you can provide your own credit report, I could use your credit report in the very beginning when we're trying to pre-qualify you to let you know your maximum amounts that you can qualify for. But for me to actually obtain the approval from the lender to let you go shopping for a house, we do have to pull the credit report through our company, through our vendor, because we've got to be able to use that credit report and attach it to the lender's portal to be able to run the DU. So I could use your credit to get started. For those that may have some credit hiccups that we need to work through for a week or two before we can get you ready to go, by all means, I can use your existing credit reports from those sources of TransUnion, Equifax, and Experian to get started there. But to actually go to the pre-approval status, we've got to go ahead and pull credit reports.
All right, Debbie, I have a question about the credit reports. Once you pull the credit report in your system, how long is that report you have good for? How long is it good for
90
before you
days
have
and-
to do it again?
90 days to the closing table.
Okay, good. So most times, if you get it done in 90 days, you can only pull it once.
You could pull it as often as you want to. It's just going to affect your score a little bit.
Right,
After
so I'm
that 90-day
talking
period
about-
and you're pulling it.
Yeah, I'm talking about you, Debbie. Once you pull the credit, that credit in your system is good for 90 days.
Correct, until closing.
Yes, so you don't have to do it again and again and again, just one time.
No. And the lender uses our credit report. So the lender's not going to repull. What we do is we call it reissuing the credit report to the lender. So there's no additional hits or anything to the consumer's credit. The lender uses our credit report.
Okay, perfect. Perfect. Okay. So, Miss Rashonda, you look like you have a question for us.
Well, I've been here for 2 years myself, and my husband is in the process of moving here. So I was just wondering, how would that work with us trying? Would he have been here, at the time?
Good question. Good question. So if he is transferring with the same company and he's going to be using that same income, there's no hesitation or limits on that. But if he is not, or he doesn't have the ability to work from home with that same company, when he moves to the new state, he is going to have to get a new job. We'll have to qualify him off of the new income employment letter, but we won't be able to close until that first paycheck comes in to validate the income. But we could still offer the income, the employment acceptance letter, approve the loan, go through the whole process of appraisals and title searches and get the file 100% ready to close, but we can't officially close until we get that paycheck that validates the income.
Okay, yeah, but he wouldn't have to have been here like the 2 years,
No,
that's what
we just have to have a 2-year history of working someplace,
got
but
it,
he
right.
doesn't have to be 2 years at the current job.
Okay, yeah, that was my.
See, that was a good one. That was a good one.
Was.
I see
Yes,
a
very good
question here in
question.
the chat, Debbie. It says, so before going into pre-approval from banks, you're able to at least get an idea of what you might qualify for.
Definitely, that's what I'm here for. I can take your income and your debts and with those numbers calculate for you the maximum sales price that you can afford. And once we know that and your cash position, then I can help determine with you which of these programs best fits your needs.
Okay, wonderful. The next question that's coming, it says, lenders and mortgage are not the same. It's a question.
Mortgage brokers and lenders. Mortgage brokers and lenders are on the same plane, however, not really the same. A mortgage lender or a bank is on the same platform as a mortgage lender. They've only got a very small circle of programs that they offer. So if you don't fit into their little block of A, B, and C, they're going to kick you to the curb. As a broker, we've got a vast array of programs, such as all of these programs, the VA, the FHA, the USDA, the non-conforming, like for instance, you're self-employed and you don't show enough bottom line tax return income to qualify. We've got bank statement programs that will use either 12 or 24 months of your business or personal bank statements to calculate your business income, and we'll close you off of that. So we don't have to do tax returns. So as a broker, we've got a broader spectrum of programs that we can fit you into.
Yeah.
Wonderful. Megan, you had a question?
Hard. Dog.
Are you guys asking a question? I think Charlou and Megan.
Yes, I did. Can you hear? Oops.
Yes, I can hear you. Go ahead.
I have a question. I divorced a veteran and he died of
Thank you
agent.
so much. Have a great night.
Can you hear me?
Yes, go ahead. Go ahead.
He died because of Agent Orange. Would I be qualified as a veteran's widow to purchase VA?
That's a very good question. I'm sitting here searching my brain for that answer. All of the widows I've done have not remarried and were married to the veterans at the time that they died. And off the top of my head, I'm going to say I don't have that answer. I'm going to have to check the VA guidelines. My gut says no, but there might be a loophole that says yes. Because normally under the widow veterans guidelines, as long as you have not remarried after the husband has died, then you're eligible to use his certificate of eligibility. But I've never, ever closed one where they've been divorced. So I can definitely, through Nikki, get back to you on that. But my gut feeling says no. But I will definitely double check that. Just being totally honest, I don't have that answer.
Okay, thank you very much.
You're welcome. So Kay, can you note that down so we can get back to Charlou and let her know?
Sure thing. Thank you.
Okay, wonderful. Okay, who else is asking a question? Maria, is it you?
Yes, it's me.
Go ahead.
The other question I have is, what is it still 30% of your, what's the formula that is being used for you to get the best, when you do your pre-approval, to get the best number of what you can afford? I know, I don't know if I'll be saying it correctly, like 30% of your monthly output shouldn't be more than 30% of your monthly intake that you're paying your bills and stuff like that. Is it still similar to that?
You're thinking of debt ratios. So the way they qualify debt ratios is going to be, again, each program is going to be a little bit specific on how high you can go. The USDA caps you at 41%. What that 41% means is of your gross monthly income, your reoccurring bills, and your new house payment cannot exceed 41%. But the Hometown Heroes program and the other down payment assistance programs from the lenders will allow you to go to almost 50%. And one of those programs has no limit on that debt ratio. As long as we get a D-year approval, they're good with it.
Okay. How about the conventional?
Did that answer your question?
Yes.
The conventional, they're going to be a little bit more conservative, like the Home Possible and the Home Ready program. They're going to really want you to stay around that 45% mark.
Okay, thank you so much. Yeah.
Yes, ma'am. Great questions.
Yeah. All right. Does anyone have any other questions? Okay. All right. Miss Rashonda, go ahead.
Yes. I was just wondering, what is the minimum credit score?
Each program had a little bit different, 600 for most of the down payment assistance programs. Obviously, the higher your credit score, the lower your interest rate. So you definitely want to work on that credit if you know that you're in that circle of being able to purchase a home. because the higher your scores, the cheaper your rate. But one of the programs goes all the way down to 600.
Okay, good. Debbie, do they still have any programs that you can qualify for with a 580 credit score?
The regular FHA program does allow at the 3.5% down, which will allow a family member, or you can borrow against your 401k. They will go still all the way down to a 550 with 10% down.
Wow.
Or at the 580 mark, it is 3.5% down. But the down payment assistance programs won't kick in for those. Excuse me, with the exception of SHIP, the State Housing Initiative Program, which I know Orange County still has the funds, they will allow anywhere from the 500 credit score and up, because they're going to gift you the money for the down payment and the closing costs. That is a program we didn't talk about today, was the SHIP program, but that is a good point. We can use the SHIP for your down payment and your closing and have that, 520 credit score and be able to get in.
Wonderful. So the bottom line, Debbie, everyone just needs to call you.
Yes, everyone just needs to call me so that I could figure out their individual situation and then determine what program is going to best fit their needs.
I got you. I got you. Hey, can you think of any question we should ask Debbie?
I have a question, Nikki. This is Olaide.
Oh, okay, Lida, go ahead.
So 2 questions, Debbie. One is, which credit report do you use? Do you use FICA, or is it FICO, or Credit Karma?
We don't use Credit Karma. We use all 3 bureaus from TransUnion, Equifax, and Experian on the FICO Model 8.
Okay, all right. And you did mention something about someone having a credit score of 580, being able to pull money from their 401k. What about people who have good credit scores, like maybe, the 700s? Can they still pull from their 401k?
Definitely. We were just kind of talking today about the down payment assistance programs for the people that didn't have the ability to do that. But by all means, your interest rates will be cheaper if you're not using any of the lender provided programs, and you're allowed to use your own money, which is your 401ks, or you can cash in a stock or a bond, or even a gift from a family member is still allowed for that initial low down payment, and you won't have the increased interest rates that go along with the down payment assistance programs.
Okay, wonderful.
Sounds good. Thank you.
You're welcome.
Yes, thank you.
I just want to clarify something that Olaide spoke about in terms of the credit report. So if you're using Credit Karma or you're using Experian to monitor your reports, I want you guys to know that even those give you a good idea of what's going on with your credit and your credit score, it's not the reports or the score that the lender uses. They use a different system. So don't be alarmed if when you call Debbie and she actually pulls your report and she tells you a different number, it's just going to be a variation of the numbers. Don't be alarmed. Don't say, Debbie, you have no idea what you're talking about. Every lender, every person that's in banking and lending, they use the same system to pull your credit report. And the bureaus are TransUnion, Equifax, and Experian. So they pull those 3, they get the 3 numbers, and then the one that's the median in the middle, that's the one they use. Okay?
Yeah, perfect.
All right, guys. All right, any questions about credit scores, anything else we can answer real quick?
I feel like Lachey has some questions.
Okay.
Lachey is still there?
No, I'm here. I'm laughing.
You're just being quiet.
I'm listening. I'm just taking it all in. No, I don't have any questions. Mine was more so like on the credit score thing, but I think I understand it.
Sure. Okay. All right. So next month coming up, we're going to have a masterclass on credit, how to have the perfect streaming credit so you can qualify for any house you want. So that's going to come up next month. And I believe that date is June 24th. So June 24th, we're going to have our credit expert and we are going to get into credit and credit score. So if no one else has any questions going
I think
once,
Maria might, she's got her hand up.
I think we answered, but she still has her
Okay.
hand up.
Okay, I just didn't want to miss anybody.
Yeah. And I'm checking the chat. I think we're good. I think we're good. All right, guys, I want to thank each and every one of you for logging in to learn more about down payment assistance and homeownership. My name is Nikki Sanji again. I'm the managing broker and owner of Platinum Key Realty. I've been doing it for over 20 years here in Central Florida and in Atlanta, Georgia. So if you have questions, you can reach out to myself. You can reach out to Kay, who is my assistant. You can reach directly out to Debbie. We all work as a team and we're all here to support you in whatever way we can. So God bless you. Enjoy your weekend. Be safe. Until next
And
time.
if anybody wants copies of the presentation, make sure Miss Kay has your email, and I'll be more than happy to email everything out to everybody.
Okay, excellent.
Thank you.
All right. Thank you, guys.
Thanks, everyone.
Thank you.
Have a
Bye,
great
everybody.
Thank you very much. We appreciate that. Was nice. Thank you.
Oh, thank you, Pastor Runke.
That was very awesome. Awesome.
All right. God bless you all.
God bless you too.
Bye-bye.